Hello guys, welcome to a new video. In this video, I'm going to share with you my last week trade breakdown and what are the trade setups on the last week. First of all, we come to the micro E Nasdaq March contract future March contract. This is the chart I'm analyzing right now. So let's see what are setups from the last week. So in the daily chart, we can see that the Friday's candle closed above. Before that, the days were came lower towards this volume imbalance. After traded to this volume imbalance, price revert in Friday. So based on that, there is a profile called Friday reversal and Monday continuation. So after the Friday candle close above it, we were looking for long in Monday. So in Monday, price opened and created this weak opening gap. I marked this with the horizontal line. Now come to the 4-hour chart. In 4-hour chart, you can see that at 6 p.m., price open traded higher and starts moving lower towards this fair value gap as well as this breaker block. Price traded to this, and we are looking for longs, and our draw was this one for the Monday. So this is the liquidity sweep with SMT. This was formed at 9:30 after US equity market open. Let's see, this one. This is the SMT and that is it. Now come to the hourly chart. Hourly chart. This is also visible in this hourly chart also. This is a 9 into 100%. Same here. Here also. So there was two entry model was visible on my eyes on a Monday. First one is based on the 5-minute chart. Price open at 9:30, traded lower to stop this liquidity and formed SMT and didn't traded to this order block. So this entry criteria was failed. Now come to the 3-minute time frame. 3-minute time frame. 3-minute time frame. What happened? 9:30 open, traded lower to serve this one with SMT and confirm this order block at this value. After this order block confirmed, in the next candle at 9:39, price open traded to this bullish order block and start moving higher towards this buy sell liquidity. There was the first entry point based on 3-minute time frame, and this was the second. After inside the 10:30 confirmation of inversion fair value gap, when this inversion fair value gap confirmed, we can anticipate one entry after closing this candle. So this was the second entry based on the 3-minute time frame. Now come to the 1-minute chart. Based on the 1-minute time frame, this was the first A class entry, A plus entry from this inversion fair value gap 9:30 open traded lower, and this inversion also found inside this 8. This is 8. Then price confirm this activated this inversion fair value gap at this 9:35 candle. The next candle could be my entry, and this is the easiest draw, low hanging fruit of the tree. This is the first trade, and then price from the first entry fair value gap. This is a high probability first entry fair value gap because it formed at the consequent encroachment of the regular trading hour gap. So this is the high probability percentage result, as well as this aligned with new week opening gap low. So this is the high probability one. You can see that how the areas were affected. This is look at this, look at the sensitivity, sorry. So based on 1 minute, this was my one. Start moving higher towards this buy side as well as this over G gap. Now let's separate. This is the this is the sorry, this is the candle. So before the analysis, we should mark this one. This is the fair value gap. We need to click this settlement price to see is there any gap or not. Then we should mark that price did not close above this high, this gap high. That's why I was not bullish for the Tuesday, and I was looking for shorts on Tuesday. Remove this and to the 4 hour, 4 hour open, traded inside this candle, took out this candle's high, traded lower, hmm. So in Tuesday, price open, traded inside this area, keep this high at 10 a.m. Okay. Before that, price gives an entry opportunity at the 6 a.m. candle in the 9:30. Now time to the start. This is the 9 a.m. candle in the hourly chart of Tuesday. Okay. This is the liquidity. Price created liquidity at this area, and I was looking for longs because price. I was looking for long short based on that what price took first. And at 9:30, price opened and traded lower and took out the sell side. That's why I was looking for the long. Now come to the 15. You can see that these highs were not traded before this sell side taken. Okay. 5 minutes. You can see 9:30. This is the 9:30 open, took this minor buy side, starts moving lower towards the sell side. It took the sell side, and after taking this sell side, it formed this 5 minute order block, but I was not traded from this order block. Mostly I trade on the 1 minute chart. So let's see what happened in the 1 minute chart. This is the 9:30 candle. 9:30 took out this minor buy side, start moving lower towards the sell side, took out this sell side liquidity, and after that there is a first setup found from this inversion, but I didn't took that one. The price again traded lower, took out this short term low, and where is the thing? This candle. I marked this candle this one week with 8, and price start respecting this week, and it traded to the this one, lower quadrant, unrespected this, and when price goes above it, this is the same in state of delivery. This is the first confirmation. that the price is now the native thing. So after that, I was not executing any trade from here. I was looking for more confirmation. So then price starts moving higher from this breaker block in the 1 minute chart, as well as this is the 5 minute order block, this horizontal line. I still not took any entry from here, and then when price closed above it, this thing, this is the market perspective. This is also the market perspective. Then when price closed above this 3 minutes SVG CV, I executed my trade right here at the opening price of this candle 952 inside the 950 to 10 macro, and my draw was this one, sorry, this one, the consequent encroachment of the opening range here of previous days. Okay, so I executed it here, close my position right here. These are the entry points. The first entry could be from this breaker block, this one. The second entry from this one, and this is the high risk, low risk entry, but you should be more experienced to take this kind of entry. I was not confident in this one, that's why I was not. I didn't took this one, and I took this one after so many confirmations. And this is called I write down here the immediate rebalance. What is it? In the CB 3 minute CB, price formed a week this week, and this candle opened trade there and rebalance this week. This is called immediate rebalance. Whenever price want to move higher and don't want to spend more time in this area, at that time price did the immediate rebalance like it did right here and start moving higher towards this buy side. I closed my all position right here. This is the macro time. So these two setups formed in the image. Look how price give show the sensitivity inside this ORG gap. Look at it. Why price fall from here? Because this upper quadrant, this upper portion of ORG was not traded before. You can see here. This is the idle area. That's why price related to this high of the ORG gap and then start moving lower towards this sell side. This was the first minute order block. Price related to this area after took out this buy side liquidity as well as tapping the ORG gap high. It traded to the 5 minute order block and from another entry opportunity right here from this inversion fair value gap inside 1150 to 1210 macro, and this could be our low hanging fruit objective. This could be our next draw. So based on that, price gap here also to our trade. So this is about the team. Now comfortably start and see what are the entry opportunities we gave on Wednesday. In Wednesday, I was looking for price to take any high or low. Like I was looking for price to take the high first or the low first to look for any trade. But before that, my bias was not clear. Now, come to the flip side. So you can also see that how price reacted from this new week opening. How many times it traded to this area? First one, second, third, fourth. You can see the sensitivity of the new week opening gap. This new week opening gap worked as a magnet. and many times price wants to trade to this area. So on Wednesday, price open, traded inside this area, took out this low, close above it, and formed a long opportunity inside the London session. Okay, and after took out the previous day high, formed another setup for short 10 a.m. Now come to the hourly chart. Took out this bottom low, close inside this range, start traded to this area. This was formed at 5 a.m. and I don't take any trades before 9:30 on the Nasdaq. That's why I was not looking for any setup before that. But after, but at 9 a.m. price took out this highs as well as took out this 8 a.m. high, and at that time I was executed a short entry. Now come to the lower time zone. Let's see how it formed. And on that day also in news, first time in my trading career, I have seen that when NXT news came on the Wednesday. So based on my experience, the data tell that NXT lows are the liquidity areas, NXT CPI lows are the liquidity areas, lows and highs. So first price took out this high of the NXT data high, and then start traded towards this low of the NXT data low. This is the 9:30. This all happened at a algorithmic time 9:30. This is the opening time of New York Exchange equity opening. So the 15 chart, I mark this range. This is the NIFTY low and high. So as well, so as I told you before that I mark this. This is the Asia range. This is the London. Took out this, closed inside this, and traded to this Asia high. This was the easy. I was kept I was kept reading on the time, but based on my rule, I don't take any trade before 9:30. So I didn't take anyone after an release. See what are the entry opportunities it gave. Took out this short-term high as well as the previous day high. Closed below it from this order block of 5 minute chart. Traded to this order block, respected it from another three candle swing after taking this short-term high. It starts lower towards this NSP low as well as this magnet, new weak opening gap. This was the entry opportunity based on the 5 minute chart on Wednesday. Now come to the 3 minute chart. 3 minute chart also shows that Hariom took out this short-term high, close below it, traded to this chart. 1 minute chart. Hmm. This 1 minute chart I trade most of the time. So 9:30 traded higher, close below it, confirm this order block. This is the order block. I marked the order block as well as price formed a first winter fair value gap at this area. This is, this is the first winter fair value gap. So this is the market structure shift. After market structure shift, price traded lower respected this the consequent encroachment of the Tuesday's first printed fair value gap and traded higher toward this 5-minute order block as well as the first printed fair value gap of Wednesday as well as this order block and respected this area and then again move low and confirm this order block again. This is also a high priority order block because this order block formed after taking out this swing high traded to this order block as well as the first printed fair value gap and the consequent encroachment of ORG gap. So this could be the second entry. Then it again traded lower and closed below this first printed fair value gap. In this situation, I mark this discount week of this candle because after this happens, I can execute my entries based on this one. This is the discount week of the candle. This is important because this is formed in the consequent encroachment or the mean threshold of this range. This is the data low, data high. Okay, as well as this is inside the first printed fair value with this mitigation block or the breaker block. If we consider this short-term high, then this could be called as breaker block. But if we consider this one, this is the mitigation block. So this is formed at this area. That's why I marked this one and divided in 8. Let's see, lower trade. This area respected exactly the consequent encroachment of this discount week. This is the algorithm. This is how price delivers. Then it traded lower. This was my drop, and this was my overall draw. And you could get high. This setup formed on Wednesday. And what happened right here? It was 5 minutes. Hmm. What happened there? This is the order block of Monday, and it was unmitigated. This is a high probability order block because it formed at 9:30 after taking out the short-term low as well as with SMT. So this should be respected. And in Wednesday, price traded there respected to this area and start moving higher. Give a good rejection from the area. This is how algorithm works. Okay, this is not support and resistance shifts. Okay, this is your ICT concept, and I trade based on only ICT concept. No volume profile, no Elliott wave, no support resistance, no supply demand, no EMA, no RSI, MACD. I don't trade this shit. Okay, I trade based on pure candlestick pattern and candlestick price action based on ICT concept. In Thursday, consider look at this candle. What is formed in Thursday? Price open at 6 p.m. traded higher after respecting this week discount week of the candle traded higher from 3 consecutive bullish candles. That's mean based on a concept that is called 3 candle continuation, 4 candle reversal. 3 candle continuation, 4 candle reversal. After opening of the 6 p.m. price traded towards the buy side. Then after that it formed a bearish candle. Now come to the 4-hour chart. Took out this swing high, okay, and respected this premium this market. It's important. Look at here. How price expected to this consequent improvement of this premium week of this candle. The candle took out this previous day high. That means this is the Wednesday 6 a.m. candle 4 hour. Candle took out the Tuesday's high and how price respected to the consequent encroachment of this premium week. It indicates that price price wants to move lower, and that's why I was looking for the short. What happened? This is the liquidity. Price created this pure liquidity right here. That is the reason behind my short entry. At 9 a.m., I formed SMT with ES, and the setup form to clear on ES. This is the liquidity. Boom. Let's see how the price is performing the lower time frame. This was the learning session low. I, this was the easiest draw for the day. Okay, because this is too close proximity. Now come to the chart. It traded lower so fast and didn't form any entries on 15 minutes. Mostly price give entries on the lower time frames in Nasdaq. So in 5 minute chart, we can see that price opened at 9:30, traded higher, formed a SMT with ES. Let's see if we start. 9:30 open, traded higher, took out this short-term high, the ES, but they didn't took out in Nasdaq. Okay, this is SMT divergence, and this allow price to trade lower, and the highs are respected here. Okay, come to the 2 minute. No entry points were visible in the 1 3 minute time frame, but on ES 5 minute first, this was auto block entry on the ES. There also 2 minute. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. It gave the breaker block entry in the ES, but not in the Nasdaq chart. Here, low probability price action looking in a lower time frame, like 1 minute right here. You can see at this candle 9:40, I see that SMT formed, and after price close below it, this become a high probability order block after this SMT. Okay, and it also created this first percentage fair value gap of the day, and then it's traded to this order block, immediate rebalance, and fall lower, sharply lower. There was a turtle soup entry inside this 950 to 1010 macro, but I didn't took this one. This was a low probability for me. I was not confident to took this trade, so I let it go. This was the entry for the Thursday. Let's see. This was so cleared in the ES chart. You can see that this was the order block. turtle soup order block, immediate rebalance, boom. Right. This was a little choppy and looks like a little low probability, but not because of the SMT. The SMT confirmed this turtle soup, and these are the entry opportunities it gave on 30. Now, then take it lower. I was not expecting price to trade this, but based on the high time frame, I was looking for price to take this high, maybe this big high, but I was not expecting price to trade it lower, trade it this much lower, and then it traded lower towards this daily volume imbalance. As I told you, this daily volume imbalance, new week opening gap, new week opening gap, was the regular trading hour gap. These gaps are works as magnet and price. So many times price wants traded to this area unrestricted. Now come to the daily chart again. See what is the entry opportunity gap on the lower time frame on Friday. On Friday, this open traded lower, respected this consequent enforcement of this volume daily volume imbalance. This one. Now come to the time frame. Let's see what it is. As open, traded lower, respected it, then again higher, then again traded to this volume imbalance, traded inside this range at 6 months. Then come to the lower time frame. This was my draw for Friday because the price showing that it don't want to go lower before taking this liquidity. Okay, and it also respecting this volume imbalance on the 4 hour time frame as well as the lower time frame. So it was clear that price wants buy side liquidity. Now come to the hourly time frame. 9 into this low. Why this low? This why this turtle soup is not valid? This 8 a.m. turtle soup because this turtle soup happened on me, and as I told you before that NFP low and CPI lows are the liquidity. Data lows are the liquidity. So as well as that, this low also found at me. So this is the low probability. And after taking this low, it again traded higher, took out this minor buy side, then again traded lower at 930. 930 took out this sell liquidity before the 930 open, like right here. I was looking for price to take out this buy side or this sell side. Okay, I marked both of these and look for price to take any one side, then I will execute the opposite side. Okay, so based on that price open traded lower, took out this sell liquidity and then it traded higher. So based on that price gave entry opportunity on the lower time frame, but not on the 5 minutes because this area was too sensitive and price expense higher for time. So that I marked this relative equal highs as my target. I was looking for price to take out this buy side or this sell side. If price took out this one, I will look for sell, and if price took out this sell side, I will look for long. But what happened? But price opened at 930. This is the 930. Traded to this area. Old fair value. Old first printed fair value. Okay. Then it traded lower. This is the last week. That means this is Friday. This FB, this first printed was the before this week. Friday's first printed fair value gap. It traded to this area, respected to this FBG as well as this order block. Then it traded lower, took out this social liquidity, and respected to this peak. These are the lines I divided this volume and daily volume in 8 and price respected to this area. This was the first printed fair value gap of Friday, and price is lower to the two side, traded higher, close above this, and it becomes first this first presented fair value gap. This first presented fair value gap became inversion fair value gap for long, and this is the immediate rebalance price. Open at 944, traded lower, respected this, start moving higher towards this buy side liquidity. Why this first presented fair value gap as well as the inversion fair value gap is high probability? The reason behind that is price took out this sell side liquidity. It also formed inside the daily volume imbalance and aligned with this horizontal line. This is the eight, like quadrant. Quadrant is the four horizontal lines divided the POI. So like that, this is the eight divide. And this first printed fair value is formed inside this one, this horizontal line. This, and again with narrative. So this is the high probability version fair value gap is the as first printed fair value gap. We traded there and it was super. This was the easy setup for Monday, apart for Friday. And as I told you that this gray shaded area was the 4-hour TB. This was my overall draw for Friday. But this was a higher additional liquidity run, and I got my first trade target at this area with lower additional liquidity run. That's why I stopped watching the price action on Friday. Then it again traded there this 4-hour CB with higher resistance liquidity run. This is not a good price action for trading. We should avoid this kind of price action, because in this kind of market, like this kind of price action, so many times price take out stop losses and did not respect it that much and did not give that much of respect to the POIs. 4 hours. So I was talking about this CB, 4 hours CB. This was my draw for Friday. And these are the set of form on Friday. I hope you learned something in this video. Let's see what happened in this week. I hope you learned something from this video. Talk to you next time. Until then, be safe. Bye. This is all about for today's back to session.